Hello investors, it's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, March 25th, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with The Big Show. The Friday expanded edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's jump right into it. State of the market. We are in an uptrend. Strong rally off of the bottom continues. You can see over here in the trend gauge, over the past week, we've updated leaders to bullish slash uptrend. Short term, 21-day moving average to uptrend, and today medium term 50-day moving average to uptrend, as all 5 of the major indexes closed above their 50-day moving average. Very good sign for the market. The only holdout, the long-term 200-day moving average, we've got the S&P above it, which is good. All the other 4 indexes are below it to varying degrees. We'll take a look at the charts momentarily and you can see what's going on there. As far as what happened today, S&P 500 makes a new recovery high. Volatile day, 2 serious attempted sell-offs during the day, but the market recovered in both cases to close near the highs of the day. G6 mid cap and small cap growth stocks lagged today big time, so we didn't really take a look at anything in that arena to add to the portfolio. So G6 down 0.76%, S&P 500 up 0.5%, NASDAQ 100 down 0.1%, Dow up 0.4, mid caps up 0.7, Russell up 0.1. 60/40 global stock and bond portfolio down 0.14% on the day. Bonds again not doing any favors to people that are in the 60/40 portfolio. The worldwide bond index down 0.63% on the day. GROTECTION in-house up 0.15% on the day. A couple of laggards like Nvidia, Sedge, and Bros, but in a lot of cases they're just constructive pullbacks. We'll take a look at what we hold also before we wrap up the video. So let's get to the tail of the tape, and let's get to a look at the team here at Revere. Where are we? We're playing hide and seek. Here we are. So trend following, people derisively call what we do market timing. We call it trend following. When the trend is up, we participate in the market. When the trend is sideways, we're tiptoeing in and out, looking for what's strongest, but pulling back a little bit when the market's in a downtrend, as it was until last Wednesday. From the beginning of the year till last Wednesday, we just get the heck out of the way. Park our money safely in cash or in low volatility holdings or things that are holding up, and wait for better days. Those better days started last Wednesday, ironically, with the first raise in interest rates by Jay Powell. The economy is not the market. The market looks forward. So it could be that any recession that is in the offing, maybe that's what the most recent pullback priced in, and now we're looking 6/10 down the road, or 6 months down the road, and things maybe won't be so bad. We don't know. We go by price and volume action to tell us what to do. We don't make predictions here. But if you're interested in this approach, you can email any of us. America's advisor, or America's fiduciary is what Tim calls him, Dan Stewart, our majority partner and president, chief compliance officer. You can reach him at dan@revereasset.com. Dan is a master of all things financial, including getting you out of bad annuities. If you're interested in talking to any of the rest of us, you can email Tim, Hunter, Muriel, or Don at revereasset.com, or you can call us on 855 Real Wealth. That's 855-732-5932. Let's get to the charts. And the tail of the tape, so we can give some perspective on where we are. State of the market uptrend. We continue. The market's battling these headwinds. Battled them on the way down, fighting them on the way back. Market climbs a wall of worry. Strong dollar, inflation, Fed tapering, rising interest rates, and of course Russia and Ukraine sentiment. The big one I want to mark in sentiment is how the VIX has fallen down to really a sweet spot in this 20 area, and that has coincided with a nice move up in stocks off of the lows. Fear and greed at 46, that's neutral. Put called 0.86, that's neutral. So our bull case, which is what we're operating on right now, the S&P, we needed it to, when we were under the bear case, S&P, we wanted to initiate a rally and reclaim the moving averages. We got our rally on 316, our follow-through day, and since then we've reclaimed the 21, the 50, and the 200-day moving averages. Now, what if this bull case would fail? Rally failure and a break back below these moving averages, we would reduce positions and move to the safety of cash. So let's start off the market day today. Pending home sales weak out of the box. ITB, home builders, anything having to do with home building, home improvement continues to be weak. We have avoided those areas. The EU and the US inked some kind of a gas deal that will reduce the reliance of Europe on Russian gas and oil. I don't know the details of it, but we also, the Yemen Houthi rebels bombed a Saudi Arabia Aramco processing facility. So that was one of the reasons for a spike in oil and a drop in the markets early in the day. We came back from there, faded again, but had a strong close. So coming in, I was watching. We reclaimed the 200-day in this key 4,500 area. Can we continue to hold them above? Yes to both cases. The low of the day on a pullback was 45.01. Holding above resistance, you'll love to see that on a pullback. Gives you more confidence of what's going on in the market. So let's see what else we got here. Action today opened up slightly. The market was tame at the open, tight action as we went up to a new high. This was the Saudi Arabia headline when we reversed hard, down 1%, but trended higher. Another fade, strong high of the day close. Here's the S&P 500. Let's look at a 5-minute chart here. You can see what I'm talking about. Here's the gap up. Nice move up to 45.46. New recovery highs. Here's the spike in oil and the move down in the market, which we just, buyers showed up and took it back higher. Don't know what caused this sharp pullback late afternoon, but I don't know what caused this sharp rally into the close either. In this case, people wanted to take profits. In this case, maybe people covering shorts or getting long. We don't really need to know why. We just need to know that we've got a thesis, and the price if the price and volume action supports our thesis, then we're happy campers. And here's the S&P 500. We were bearish the whole way down here. We had a fake follow-through day up in here, high cash levels. We were down at the most 5%, while the S&P was down about 13%, and then things looking very bleak. That was on 3/14, darkest before the dawn, the day before the Fed. We had a nice move up, day of the Fed, intraday sell-off, but a strong close, and we've been basically off to the races, up 7 out of 9 days off of the bottom. Reclaiming along the way the green 21-day, which had acted as resistance for the prior 3 to 4 weeks, reclaiming the 50-day, which we had been under since we broke it all the way back on 113. Actually, we broke it before, reclaimed it, and broke it again, but 113, and then of course the 200-day moving average, which is the granddaddy of long-term moving averages. Market risk picks up substantially when you're underneath it. Happy to be back above it on the S&P 500 and making higher highs off the lows, and buyers showing up on 2 attempted sell-offs during the day, so that's good stuff. Portfolio, we added Tesla, small position in Tesla, as it had a double inside day. What's a double inside day? Well, let's take a look at that. Tesla's been rallying. This was its first down day off the lows, but went a little too far too fast, so we had this negative reversal, closed at the bottom. That's typically could be considered the second candle in an evening star formation, which is a topping pattern, but you need confirmation of it, and we didn't get it. Thursday, we had a nice tight range inside day, and then today, Friday, even tighter inside day. Now, this is the beauty of this move in Tesla and why we took the position today. Yeah, it's a little bit extended. Look at the volume on the move up. Look at the volume on the contraction the last 2 days. way dried volume, which is exactly what we want. Good entry position here, light position, size-wise. We'll give it a little bit of room, but this is quite a run up off the lows, screaming, I'm a leader, and we listened to it. Nvidia is the other one that screamed at us. Took us a little while to buy Tesla, but we got into Nvidia pretty quickly. So we added Tesla, and also semiconductors on fire, particularly yesterday. Pulled back today to the 200-day moving average on the SOX. There was 4 or 5 we were discussing buying in-house. We just went with the broad SOXL. Tough for any individual name to outperform SOXL. It's up 45% off the lows, as semiconductors are up 15% off the lows. Nvidia leading that pack, but there's a new sheriff in town, actually, GFS, and that's been in the 21 over 21 list for a couple of weeks. We'll take a look at that chart momentarily. So strong sectors today: banks, oils, marijuana, as we're talking about federal legislation to decriminalize marijuana, basic materials, kind of defensive on the day. Staples, utilities, and real estate led. Growth lagged today, but growth had been leading, so just kind of switching the baton from one hand to the other. Weak today, bonds, which means interest rates continue higher. This is always going to be a drag on growth stocks as that happens, but strength in weakness in semiconductors, software, solar, retail, builders, and biotech, as it was a risk-off day. So bottom line, at S&P 500, new recovery high, 8.9% off the low, up 7 of the last 9 days. That's good stuff. And you can see the key levels here. Seems like it was yesterday, but it was only 8 sessions ago when we had red all over the place on these key levels. Now we've recovered them back above the 200-day, the 50-day, the 21-day, and now we're heading into prior consolidation ranges up above. Here's your S&P 500. Let's go back to it and see what the key levels that we need to fight through for next week. So any pullback, we want to hold the 200-day for sure. Things will change again if we close below the 200-day, like we did here. Spent 6 weeks, 6 weekly closes below it before getting back above it this week and breaking that streak. But above us here, this 45.50 area is going to be basically where we paused on the upside today. 45.46, new recovery high, but you can see these 2 days that we poked above it during the last attempted follow-through day, we ran into 4,600 then. Over here, you can see this 4,500, 45.50 area, and the breakout here, 45.50. Charts have memory. They look back. They and support and resistance they're a real thing. You see it time after time on charts. So the next thing we want to do, we're right up against a lower resistance level today, 4,600, above these 2 highs from the last 2 attempted rallies before the first follow-through day failed. That's what we want to try to get back over today, and then again on the downside, hold the 200-day moving average. That's your S&P 500. Let's go to your NASDAQ 100. Still below the 200-day moving average, above the 21 and above the 50. Definite relative strength over the last week and a half. That's what you want to see. NASDAQ 100 and tech lead the market up. They lead the market down. Dow Jones Industrial Average, nice consolidation here. Nice move off the lows. Can't get through the 200-day moving average yet. Above the declining 50, and the 21-day has turned up. That's the green line. How about mid caps? These had led the recovery for a while. Tried to get back above, but could not close above the 200-day moving average, but closed right below it today. So this is a nice consolidation. Lack of relative strength over the last 2 weeks as money has flown into some big tech stocks. Let's look at IWM, which led for a while. You can see the relative strength line here, but again, weakness over the last 2 weeks as money, as I mentioned, went into big tech. But we've got the 21 crossing back above the 50 here, the 50 flattening out, but we're still 5.6% below the declining 200-day moving average on small cap. So 4 of the 5 indexes still below the 200-day moving average, which is why our long-term trend is still bearish. So there's the tail of the tape that wraps it up for there. Let's take a look at the 21 over 21 list. Let's get this back to our normal size. Show the 21 over 21 list. No changes from last week. Every one of the 21 over 21 stayed above. That's a good sign of strength. That's also one of the reasons why we upgraded earlier this week leadership to bullish. Let's go through these. We've got 12 sectors, 21 industry groups, nice and broad. Let's go by the ones that have been in here most recently. Pure Storage, another one of the new recent leaders. Now 12 of these 21 are at close the week at all-time highs. Pretty impressive. This is why we focus on leaders, because we're still quite a bit of a little less than 6% below all-time highs on the S&P, 12% away on the NASDAQ 100, but 12 of these stocks at all-time highs. So that's why you always want to keep your leaders list fresh. This has been riding the 8 higher, let alone the 21. Definite new leader, Pure Storage. Sedge, we're into this after this shakeout. We've got some pretty quick gains in this. This could really move if it gets above the handle in this cup and handle that it's forming. Nvidia, one of the first stocks that we bought off of the lows, got 3 ATR extended yesterday. We sold a little bit of it. It's had a nice tight consolidation day today. When it catches up to the moving averages, we'll look to add back, although we did add SOXL today, as I mentioned previously. Dutch Brothers, failed breakout here. Big seller at 62 on Tuesday. Couldn't recover from that, but volume has been light the last 3 days while it's pulled back. So not wholesale selling. You can see some nice buying here about a week and a half ago. Bounced off the 21-day exactly like we want to. We plan to add to this position aggressively if it does get above the 60 level. Costco, just in a nice, tight, low volume range. Lack of relative strength over the last 2 weeks, but still looking fine. FCX got shaken out of this, unfortunately, under the 21, and it's just continued to ride hard higher. That just happens. It's just part of the game. GFS, this is the new semiconductor leader. Look at this nice handle that it formed when it tried to break out of the cup. A little too quick, pulled back to the 80 MA, closed at all-time highs today. PSA, another high close. This is our favorite REIT right now. They operate self-storage facilities. Union Pacific, with the high cost in gas, transportation rails have been acting pretty well. All-time high for UNP. Dollar Tree continues to trend higher. People look to save money by buying at discount stores. LNTH, one of the new leaders, harsh pullback on Thursday. Tried to move out, ran into the 80 MA. This is one of the most questionable ones that's on the list. We do not want to see it break below today's low or Thursday's low, as it's sitting right on the 21, and there was some volume with the selling. Halliburton, looking great. Nice move today. This one that we sold when it was extended here, bought it back on the pullback, very similar to what we did with CF and New this week, although they show no signs of pulling back. But when you're extended 3 ATR and we've got near 20% gains, we're just going to take some off the table and see if we can get back into it if it continues to act well as it pulls back or the moving averages catch up to it. Palo Alto, another big leader that unfortunately we got stopped out of 2 weeks ago. Newmont Mining continues to act well, bounced off the 21. Nucor, we sold, we did offensive selling on this on Wednesday and Thursday, made another higher high. Don't regret it. It's just, it's 2 ATR above the 20, 3 ATR above the 21, but it continues to run. That happens, no big deal. Arch bounced off the 21 today. Abbvie continues to just trend higher along the 8, very strong. Berkshire Hathaway, very nice move along with the market off the lows. Zim, 3-day pullback. Now it paid a big dividend here and gapped up, but that ended up being a sell the news event as it has pulled back pretty hard over the last 3 days, but pretty hard in price, not so hard in volume. and still above the 21. So keeping an eye on that. Shipping, transportation shipping definitely has been a strong group. CF, as I said, we did some offensive selling in this on Wednesday and Thursday, continued higher today. And finally, Devon Energy, which we're not in right now, but continues to be one of the leaders in the oil group. Basically, oil continues to be the leading sector. So that's going to wrap it. As always, I'd love to hear feedback from you. You can email me, don@revereasset.com, or you can phone 855-REAL-WEALTH. Let's take a look at some things that are not in the 2121 that we do own in-house. We've got long leverage position in the QLD, which is the double long QQQ. We took that position as it broke above the 50-day moving average, pulled back and held. So that's a recent new position. We own SPLG, which is the 1-time S&P 500, and we own SSO, which is the 2-times S&P 500. We also own, let's see, Chevron. We bought that this week, trending up after this big gap down here, found support at the 21. Just the volume's low, but all oils just continue to trend higher. We're going to have a tight stop on this one, however. Costco we own, we looked at that chart. Halliburton, we looked at that. Nvidia, we looked at that. Sedge, we looked at that. Bros, this is the fly in the ointment, but still bounced off the 21. We're underwater on this by about 3, 4, 5%. We did two individual buys on this, and we are underwater on it. But as long as it holds today's low in the 21, we're going to stick with it. And that is about it. I also mentioned we added Tesla today on the double inside day. It's not in the 2121, but it certainly is knocking on the door to get in if something falls off the 2121 list. So again, don@revereasset.com, 855-REAL-WEALTH. Appreciate everybody listening. Have a great weekend.